Good morning and welcome to our webinar, Payroll Protection Program Loan Forgiveness. Where are we now? My name is Matt Venuto. I lead the sales efforts for ConnectPay. I'm joined today by Drew Schildwachter, who oversees operations.
Thank you, Matt, and good morning, everyone, and welcome to both our clients and RAM members to the continuing series on PPP loan forgiveness.
And first off, I'd like to give a big thank you to the Retail Association for your continued support and for organizing this webinar. I've been working with the Retail Association for the last 15 years, the last 6 as a payroll partner with ConnectPay. We find the RAM resources and vendor affinity programs to be of great value to our clients. And I'd also like to thank the RAM members joining today that are current ConnectPay clients. We appreciate your business and your continued support. For those who may not be as familiar with us yet, we are a Massachusetts-based company that focuses on supporting small business with payroll processing and compliance, essentially an extension of our client's payroll department. Our relationship with RAM provides members some additional considerations over what is available to the general business community. Some of these considerations are 1, a payroll best practices checkup evaluation for any RAM member. What that looks like is a consultant will sit with you and explore your payroll process along with all ancillary services attached to payroll with an objective to lower cost, introduce most efficient ways of processing payroll, and most importantly, confirm your compliance. Secondly, we have a preferred pricing program. We extend this to every RAM member, regardless of size, and you all receive a 30% transactional discount on our processing services ongoing. Lastly, we have a complementary program with Cove Risk Workers' Comp. It's a payroll integration. So for members utilizing the Mass Retail Workers' Comp group through Cove Risk, we've designed this pay-as-you-payroll service. It allows you to minimize your audit exposure and increase your cash flow by paying for premiums directly through payroll each pay period. Off to you, Drew.
Thank you, Matt. So our agenda for today is to give you a quick review of the last 6 months and then comment on where the program is now for forgiveness. Then we're going to switch into choosing the correct forgiveness form and then how to prepare forgiveness. There's some tax implications and also review the safe harbor and still leave time for questions and answers at the end. So please check the chat box for links to our covered period calendar. This is a really important step and you may find the tool useful. So the PPP program was passed in March with the first batch of loans beginning in early April. By mid-April, the funds were depleted and Congress quickly passed additional funds by the end of that month.
The program allowed borrowers 2.5 times monthly payroll to be used on payroll and certain non-payroll expenses like mortgage, rent, and utilities. In May, the SBA announced its long-awaited PPP Loan Forgiveness Application Form 3508. This introduced the alternative payroll covered period, which allowed payroll costs to begin at the start of the next payroll period after a business had been funded. This was available to weekly and bi-weekly payers only.
And then again, in early June, the PPP Flexibility Act was passed. This gave borrowers 24 weeks to spend the funds and still obtain forgiveness. It also reduced the payroll requirement from 75% to 60%. There was also flexibility offered around rehiring workers. New exemptions were added if borrowers were able to show that they were unable to fill positions with similar qualified workers, or their workers refused to return back to work, or CDC rules made them unable to return to pre-COVID employment levels. These are all part of the FTE safe harbors. We'll review those later. Flexibility also extended the time borrowers have, and they are no longer limited to a 6-month deferral on repayment, but can wait to repay PPP until the forgiveness application has been processed and completed. In fact, borrowers now have 10 months after the end of their covered period to apply for forgiveness. So the big takeaway there, no rush. So where are we now with respect to forgiveness? Every Thursday afternoon, we participate on a town hall Zoom meeting with leaders from the payroll industry, the banking industry, and members of the American Institute of CPAs. And they've got a government affairs office. So we get to listen in on what's going on at the SBA and the challenges the lenders are having. And a couple things stand out. One is the capacity at the SBA and fraud as probably the two significant obstacles to forgiveness at this point.
First, we should point out that the SBA Commercial Loan Servicing Center in Little Rock, Arkansas, as well as the SBA Center in Fresno, California, are scaling up to take on the influx of application. But as of now, we do not believe they have the appropriate amount of staffing to handle the 5.2 million loans that are out there.
Yeah, so just to comment on that, think about it. There's 5.2 million loans that went for 5,400 lenders that go to 2 SBA centers. And that kind of illuminates the amount of congestion and bottleneck here. Then the next one is fraud. And this is a big SBA concern. You know, the Justice Department, along with the FBI, continue to bring forward fraud cases. There have been instances where people applied for multiple loans and many interesting and creative examples of fraud. Now, the SBA is giving banks the instructions to perform good faith review, but not being clear about what the banks are responsible for if fraud is detected. Some banks feel more compelled to do more in-depth reviews, and in some cases, we're hearing that the SBA is requiring additional documents from borrowers from the list of documents that need to be collected and retained but not submitted as they begin the process of granting forgiveness. So we believe they're working on systems to better understand where fraud may exist. And additionally, they've hired Equifax, which is one of the largest credit reporting agencies, to provide for forensic accounting services for them. So we're frequently asked, should I apply now or should I wait? And every borrower has a specific use case, but these next two issues are unresolved and in both cases might suggest waiting. Now, one of the big gray areas is taxation. Congress wants to pass legislation to allow the forgiven loans to be considered non-taxable. But under current IRS regulation, and they let out this notice 2020-32, if a loan is forgiven, the expenses that the loan was used for cannot count as deductible business expenses for income tax purposes. Therefore, the forgiven loan looks like taxable income. So we recommend that you talk to your CPA. And we've also understood that the AICPAs is among hundreds of the organizations that's urging Congress to allow for full deductions for PPP-related business expenses. But this is another indication that it might be easier next year when the Congress has settled down and they roll up their sleeves to get things done. But I can't emphasize enough that borrowers need to discuss options with their CPA based on their situation.
Thanks, Drew. The second is blanket forgiveness. So 86% of PPP loans were $150,000 or less. Because the current loan forgiveness process can be tedious, members of Congress have proposed legislation that would allow for a much simpler process. The commonly discussed threshold is 150,000 and below, but that could change. And there's a possibility that blanket forgiveness won't be granted due to fraud or bipartisan politics.
So just to add on to that, the Senate passed a bill that simplified forgiveness was for 150,000 or less, but it never got passed. So the SBA a few weeks ago released 3508S, which is a simplified form for loans that are 50,000 or less. And so, regardless of this taxation or blanket forgiveness, everyone needs to understand what these three forms are and how it fits into their particular situation. So we're going to start first with the form 3508S, and this is for loans of 50,000 or less. So depending on your bank, you may be submitting this information through an online portal, but we do recommend that you complete the form as a tool to prepare your submission to that portal. If your bank is not offering an online solution, they may actually want a form submitted in a PDF format. So we're seeing a lot from the banks. So, some of obviously the bigger banks have these portals. Some banks have offloaded the processing of the loan forgiveness to CPA firms, and other banks, smaller credit unions, et cetera, don't have the capacity to build these portals. So they'll be dealing with it. So you've got a wide variance of how the banks are going to be handling this. So we're going to walk through this together. This is the top part of the form, and this is really your business demographics. So very straightforward. As we move down, you've got your loan number and the lender number, as well as the amount that was funded and the date that that disbursement happened. And that date's very important, as we'll see in the next section here. The SBA is asking for employees at the time of the application and also at the time of forgiveness. Now, this shouldn't be mixed in with the full-time equivalents because that's a different calculation. This is just a number for their statistical and to help them process the loan. Next is the EIDL advance amount. That was the economic injury disaster loan. And what we've heard from the banks is this is the single biggest mistake, folks not putting in their EIDL amount or their EIDL application number, and then the amount of forgiveness that you're requesting. And then they're asking borrowers to make certifications and representations. So the first part is that the amount you're asking for forgiveness doesn't exceed the PPP loan, and that you followed the guidelines that were set forth with respect to total amount of compensation for employee, for owners, and also the business expense. So this is the different percentages. You're also saying that you didn't use these for fraud, and you're verifying the payments for payroll and non-payroll costs. So what's interesting is you're not asked to put the payroll amounts on this form, but in the next one, I have submitted to the lender the required documentation verifying payroll costs. So borrowers using this S form still have to bring all that payroll data and the other data around other eligible costs if they choose to use them. So, and this is part of the friction with the banks. The banks are saying, okay, I have these documents, SBA. Am I responsible to verify them? And what happens if fraud is detected? So this is part of the gridlock. And then you move down to the information provided is correct. The tax documents I have submitted to the lender are consistent with those of the borrower. So really what they're saying is when you submit your payroll expenses, a borrower needs to include the 941, which is the quarterly report. So the quarters impacted are Q2, which would be April, May, June, which was prepared in July. Then it would be Q3, which takes you through September and prepared in October. And then if you continued and your covered period went into October, technically you'd need the 941 that we'll produce in January for the last part of the year. So that's part of what you're saying is these are the same documents I've submitted with my payroll. And then you finally agree that you will make these documents available. So that's it for the S form. There is no requirement to retain staff or have FTEs. So this is their S simple version, again, for 50,000 or less. But remember, you need to submit all the documents behind it. And at the bottom, of course, you need to sign it. So before we move on to the EZ form, one of the first questions that needs to be answered by every borrower, regardless of the loan size or form used, is establishing the covered period and, if applicable, the alternative payroll covered period. So we created this 2-page download, which is basically a calendar with the instructions. But I just want to walk everybody through it. So the covered period begins. You want to take this part, Matt?
No, I was going to say, can I stop you there for a minute? So the 3508S does not indicate anywhere on the form that the payroll covered period or alternative covered period to be identified and submitted. You just mentioned that these should be included as part of the forgiveness process.
So again, that simple page is basically saying, I attest that I did everything correctly. And that's the form that gets submitted. But behind that, one of those check boxes is I've submitted my payroll along with my 941s. So to do that accurately, you need to know what is your covered period. So let's walk through that. So if you start at that top there, it says select covered period. The beginning is the date you were dispersed. So that is the actual day that the money wound up in the borrower's account. And that's the beginning of the covered period. Now, borrowers who had loans before June 5th can still use 8 weeks. So they could make the end of their covered period that 56 days. Most will take 24 weeks. And that 168 period then is the covered period. So the covered period is for non-payroll expenses if someone decides to use the alternative payroll covered period. So this is the important thing. So let's say I get funded on a Wednesday and I'm a bi-weekly payer because the alternative covered period works for weekly and bi-weekly. This allows me to slide to the beginning of my next payroll period, start to accumulate hours and wages, and that's the beginning of my alternative covered period. The benefit, you don't need to prorate or run half a week's payroll and make these calculations very complicated. So again, the alternative covered period is available for weekly and bi-weekly borrowers who want to shift to the beginning of the start of the next pay period and then can continue either 8 or 24 weeks. And that's the end of their covered period, because all of your payroll reports, if you call Connect Pay or any other payroll provider, you're going to want to request all of your payroll reports based on that payroll covered period. And if you're using the alternative. Now, if you're monthly, they didn't give you that option. So folks then have to stick with that, the day it was funded, and they will have to, if that conveniently landed on the start of a pay period, great. But if it didn't, they're going to have to run the reports based on partial payrolls, which just makes the calculation a little bit more difficult. But this is super important. Every borrower needs to do it. So we recommend downloading this and keeping this for your records. All right, so moving along to the 3508 EZ. So this form is available for one, if you're self-employed, or you did not reduce salaries more than 25% and did not reduce the number of employees or average hours paid, or you did not reduce salaries more than 25% and were unable to operate due to COVID. So this form came out after the original, but before the S. So my thinking is as follows. If you're self-employed, if you have under 50,000, I'd go for the S form. It's pretty hard to be self-employed, have no employees, and got a PPP loan for over 50,000. I'm trying to figure that out, but you'd have to be, an extremely well compensated type of consultant for that to fit. So I would say that most self-employed people will use the S form. So then it really gets down to, did I not reduce annual salary or hourly benefits, or was the nature of the CDC guidelines or my state requirements such that I comply with the second checkbox on the front of that form. So if you're looking at the easy form, you need to download the instructions and read those two alternatives carefully. And if you fit, then you're able to go ahead and use the easy form. And we're going to fill in some of that gray area around what are acceptable safe harbors as we move through here.
So top portion is your business information. You have legal name, DBA, address, EIN, phone, email, and contact information. Then moving down a bit, again, you have your SBA PPP loan number, lender name. The PPP loan amount is the amount that was put into your bank account. For the loan disbursement date, the day that the loan was dispersed into your account, which becomes the start of your covered period. Moving down.
Yeah, so next section, this is the same as the 3508 S, the employees at the time of the application and at the time of forgiveness. And again, they don't calculate into the FTE, but the SBA wants those. And again, the idle loan and the idle application number, very important. Then moving down, now we just covered this with respect to weekly and biweekly or semi-monthly, monthly, other. So you put in your covered period, which is the fund date to the end of your either 8 or 24 weeks. And then if applicable, you would put in the dates for your alternative payroll covered period. Now this next section, there are out of 5.2 million loans, 30,000 are over 2 million. So if you do have a $2 million loan and you check that box, you'll be audited. There's also different forms that need to be added to it. And you've got to quickly turn those around from what I understand. But I don't believe anybody on the call here fits into that. If somebody does and they want to email me, my email address will be at the end and we can sort of discuss your situation. So we'll move on to the next section here. And this is, now I see some questions coming in. We have in our payroll system specific reports. So once you know your dates of your covered period, you can request from your client service rep a PPP payroll cost report, which does all the calculations to fill in into line 1. And we also have reports on the Schedule A worksheet, which allows you to calculate, and it does the math of calculating your FTEs. So we'll get to those reports in a little bit, but let's just walk you through this. So you've got line 1, which is your payroll costs. And the reports may be different for different payroll companies, but there is consensus on what those costs are, and they're in the instructions. Then you've got your mortgage interest, rent if applicable, and then your utility payments. And then followed by, you basically add up lines 1 through 4, then you put in your loan amount, and here's where you do the math, right? You take your total payroll costs, and because 60% is the threshold, you divide line 1 by the 0.60, and then the final line is the amount of forgiveness. So what we'd like to do is show you an example. This is a super simple example. I just picked a company that had $1,000 a week in payroll, and they selected the 8-week time frame. So they had $8,000. They don't have a mortgage, but they pay $1,000 in rent, and they had a $500 utility payment. So we add all of those up, and they've got the potential for forgiveness, $9,500. They got a $10,000 loan, and then when you do the division, the math on line 7, where you go up to line 1 and divide by 0.60, that shows you that they have a potential threshold of 13,333. But what you do is you pick the smallest of those next 3 lines. So they got 95% forgiveness in that scenario. So the next slide is a different way to approach this. And we went back to the same company. We just selected a 24-week time frame and made it super simple. Just going to do payroll. We're not going to care about the mortgage interest lease. We're not photocopying any bills. And we put that $24,000 into line 5. We got our $10,000 loan. We do our math, and voila, we got total forgiveness. So we think there's a success strategy here. It won't work for everybody, but the amazing thing is that that top line, they let you keep all of the payroll in the covered period to meet your threshold. So we believe that borrowers who opt for 24 weeks, whether it's covered or alternative covered period, and then they submit 100% payroll, they're taking third-party branded payroll reports, right? So this is not something that they can doctor up. Also backed by the same tax filings, the 941s, is the easiest way to get past the banks and get past the SBA, because you're not complicating your application. So we believe that they built this form to kind of drive that way. This thing was called the Payroll Protection Program, and it certainly got modified almost constantly. But we think this is a super successful strategy. All right, so moving along, you've got the same type of certifications that you need to make, and they follow the S form. So I won't go through each and every one of them. But at the bottom, you've got to initialize one of the following. So this is, now that we're in the EZ, the FTEs come into play, your full-time equivalents. And you have to attest to either, I didn't reduce the number of employees or hourly wages, or the reason I reduced them is because I was unable to operate due to COVID restrictions. And if you go through the CDC website and Health and Human Services, OSHA, and then you look at executive orders for your specific state, there are just an enormous opportunity of ways to document restrictions on business if you happen to have a shortcoming there. And then there's also there's a borrower demographic page with all of these. And if you see up at the top, it says optional. And this is really data collection for the SBA. So again, it's optional, so we won't go into that. And then Matt.
Yeah, and then the last option is the original 3508, which was introduced first. This form is required if you do not qualify for the other 2 simplified forms. If you're in the small minority that needs to use the standard form, we have a Schedule A worksheet available in both PDF and Excel to support. And then, as previously discussed, the Paycheck Protection Program Flexibility Act established an additional safe harbor to the loan forgiveness reductions and full-time equivalent headcounts for the PPP. So this is referred to as Safe Harbor 1. Businesses that weren't able to operate at the same level between February 15th and the end of the covered period because of compliance with guidelines issued between March 1st and December 31st by the Secretary of Health and Human Services, Director of Centers for Disease Control and Prevention, or the Occupational Safety and Health Administration, all qualify for the safe harbor. In addition, the SBA recently announced or clarified that this safe harbor includes state and local governmental orders in addition to the federal compliance guidelines. So overall, it appears that the SBA will be broadly interpreting this safe harbor and anticipates that the vast majority of borrowers will rely on this particular safe harbor as opposed to the other available safe harbors. If a borrower intends to certify that it qualifies for the safe harbor, the PPP forgiveness application requires the borrower to maintain documentation supporting the certification. This documentation includes copies of relevant governmental orders, copies of the applicable requirements for each borrower location, and relevant borrower financial records. So I pulled a few off the mass.gov website here, just a few examples. One that I use is a restaurant, which reads, tables must be positioned so to maintain at least 6 foot distance from all other tables in any high foot traffic areas, i.e. routes to bathrooms, entrances, exits. Tables may be positioned closer if separated by protective non-porous barriers, structural walls, plexiglass, not less than 6 feet high, installed between tables in high foot traffic areas. Some other examples for the retail industry are 50% of the building's maximum permitted occupancy as documented in its occupancy permit on record with the municipal building department or other municipal record holder. Another one here, in any case, no enclosed space within the building shall exceed occupancy of 10 persons per 1,000 square feet. So again, this is a very broad safe harbor, and all indications are that the majority of businesses that experience any restrictions can make a reasonable case of why employee counts have been affected with supporting documentation.
And then Matt, on the safe harbor too, basically said if somebody reduced their FTE levels in the period beginning in February 15th and ending April 26th, and then the borrower restored its FTE levels by no later than the end of the year, then that's the second safe harbor. So if someone had a very intense slowdown, let staff go, but then was able to bring all of that staff back, then they qualify for the safe harbor. And again, can not only use this form, but won't be penalized or have the forgiveness prorated. And then in addition to Safe Harbor 1 and Safe Harbor 2 are a list of the reduction exceptions. And I think we've talked about these in the past, but basically if a borrower makes a good faith written offer to rehire an employee and the employee rejects, and we saw that a lot when the additional $600 unemployment benefit was available, that is an exception that won't impact your forgiveness. If you fired someone for cause, if they voluntarily resigned, if they requested and if they asked for less hours, and the employer and employee agree, again, document that. And then if the borrower made a good faith offer, but the employee rejected those offers for reduced hours, et cetera, that those all qualify So, and they kind of work in concert with the Safe Harbor one. So again, any of these examples do not impact the borrower's forgiveness. So I put up here the Schedule A, and the reason for this is part of the 3508 form, but what employers need to know is on the right side of that Schedule A worksheet, we've built a report that you can basically ask. It's the PPP Schedule A worksheet report. So it's available, just contact your client service rep. And there's a couple things that you can do with this. Now, I would request it both in PDF and in Excel for one important reason. You're not supposed to have owners in this report, but never before in the world of payroll did we document who was an owner. So very often family members are owners. And so the Excel allows you to remove those individuals that are owners, and the instructions are right there, and then recast the PDF and save it for your documentation. But this tool is very effective for looking at your look back period and moving forward and calculating your current FTEs. So folks should use that and understand what their covered period is, run the report. Now, again, if you have the S form, you don't have to worry about this, but I don't see a problem with anyone requesting it and understanding where their FTEs were, documenting, because I believe that Safe Harbor 1 is pretty broad and very useful for most people not to have FTE count reduction. So the things you want to consider is there's two ways, and we do it in our report to calculate the FTEs. Matt, I think you discussed the first one. You add up all your part-timers and divide by 40, or you can just count every part-timer as 0.5. Anyone who works full-time, 40 or more, is a 1. Anyone who works less, and I can give you an example, say an ice cream shop has a lot of teenagers and they work 6, 8, and 10 hours, then the 0.5 is pretty advantageous. If someone has a lot of people working 30, 32 hours, you'd want to add up all those hours and divide by 40. Regardless of the method, you have to use the same method for your look back period as you do for your measurement period. So that's important. Then remember, there are 2 safe harbors and 6 FTE reduction exceptions. They all work. And then you've got to determine your payroll period, your covered period, and your alternative if you're going to use that, if you're able to use it. And then remember to retain all your documents for 6 years. So we recommend you completing our little calendar, keeping that with your package. So back to you, Matt.
And now it's time for questions. So in the event we're unable to address all the questions, it looks like we will be able to today, but please reach out to Drew's email as you see there. And if there's interest in Connect Pay, I'm more than happy to speak with anybody. Please reach out to me directly at my email there. And we will be sending an email out this afternoon with the link to the recording of the webinar, as well as downloadable references. So keep an eye out for that. And we'll switch over here to some of the questions. So first question is, Eric, what reports are you able to generate for us that will help us file an easy PPP forgiveness application? Not only the covered period, but also the FTE calculation.
All right, pretty straightforward. So the first report is your payroll, the PPP payroll cost report. So if you give our client service rep your covered or alternative payroll covered period, they'll be able to produce that document. And in the right-hand box is the amount that would go right into the form. Then we get to the Schedule A worksheet is the tool to calculate your FTEs. Decide on your look back period. So borrowers need to remember way back when the original form came out, there were 3 reference periods. One option was February 15th, 2019 through June 30th, 2019, or January 1, 2020 through the end of February 2020. And in the case of a seasonal employer, either of the 2 preceding methods or a consecutive 12-week period between May 1, 2019 and September 15th, 2019. So once you understand your reference period, you can ask for that, schedule a worksheet for the reference period, ask for it both in PDF and Excel, and then you can go ahead and do it for the covered period. And now you've got the tools to go ahead and make those calculations. And if you do have owners sitting in the Schedule A worksheet, you can use Excel to remove them. The instructions are right there, and that'll give you your FTE calculation. It shows both columns. It shows the simplified method of hours divided by 40, and it also shows the 0.5 method. So you choose which one is optimal.
Now here's an interesting one, Drew. I know we've had conversations about this. I don't know if anything is definitive yet. So this is Steve. If another round of PPP loans is offered at some point, can we apply for one, even if we have not submitted our forgiveness application for our first loan?
Yeah, that's impossible to answer. There was a push for PPP too, and there was talk of it being means tested, but then we got into election season, and I would say, considering what's on the news, no one can answer that.
Anonymous attendee, why do they want to know our economic industry disaster loan info amount? And that's because that amount is deducted from the overall PPP forgiveness, correct?
Correct. So if I got an EIDL advance of $10,000 and a $50,000 PPP loan, the EIDL's mine, but I can only get $40,000 forgiveness on the PPP. So the EIDL amount comes off your forgiveness amount.
Next question, Mike. I can't find my SBA loan number. The bank doesn't have it. Do I have to call the SBA? Is it difficult to get through to them?
You're going to have to find it unless the bank finds some way to get around it, but it's very difficult to get in touch with the SBA. It's impossible for me to answer how to get that. I'm sorry.
Next question, anonymous. If an individual owns 4 different companies and each received a loan for less than $50,000 each, can each company fill out the form 3508S?
Good question. They do have language about the aggregation of those, and I'd have to do some research. I know that if in aggregate they're over 2 million, then you are not able, but I can't guarantee. But I would recommend you contact your lender.
Next question is Kate. Are the members of an LLC considered to be employees on form 3508EZ?
It depends, right? So you can be an LLC and then you can treat it as a subchapter S, and then you are considered employees. So I'd need to know more about your entity structure to correctly answer that.
So please reach out individually, Kate. Thank you. If you own the building that you rent to your, oh, this is an interesting one. If you own the building that you rent, anonymous attendee, if you own the building that you rent to your company and there is no mortgage on this building, can you take the rent expense on the loan calculation?
No, you can't. They call that related party rent, and they wanted to prevent what they considered double dipping. So kind of in June and July, they recrafted that. And that's another reason to just do it 100% payroll, right?
We've had a lot of those questions come in.
You
webinars.
sidestep that. Yeah, yep. So no, you're not able to. The only thing you could do is mortgage interest. And if you have no mortgage, you're kind of out of luck there.
Thanks, Drew. Next question, Connie. How do you, and I think we've covered this a little bit. How do you calculate FTE? We have many part-time employees.
Yeah, so there's two methods. All the full-time people are one, regardless of how many hours they work. Even if I work 60 hours a week in overtime, I still count as one. Then you take all the part-timers. You can either just call them all 0.5, or you can add up all their hours and divide by 40. And that's your calculation options. Again, that Schedule A worksheet will do that, but you need to know the dates you're requesting them.
Next question is from Karen. What if a portion of the employees I hired were H-2B visa holders? It's the first time I've heard that one and how it affects things.
Well, first of all, PPP forgiveness is only for employees that are in the United States. And boy, that's interesting. Send me an email offline. We'll find out.
Next question, Robert. If the PPP loan is over 150,000, can the 3508EZ be used?
Absolutely, as long as you can answer on that front page those two questions about not giving a more than a 25% haircut in wages and hours.
Thanks, Drew. Next question from Karen. My loan is under 50,000. Can you see any advantage to using any application other than the 3508S?
I can't see any advantage. I would go S all day long.
Next question, Stuart. What if the owners are also employees? Are they included as employees, but at limits of salary?
Yeah, those are the limits that were pretty well discussed before. Owner employee is capped at 15,385 for 8 weeks, or 20,833 for 24 weeks. They are not able to add in their retirement, employer retirement, or employee health contributions. They're stuck just at the wage limit.
Next question from Min. Is the full-time equivalent number higher, better, or lower, better for forgiveness application? I have both methods and they come out to different numbers. Well, the higher, the better.
Well, the higher at the end, right? You want to start with a low number and end with a high number. Your look back period, but you can't change methods, right? You can't do the divide by and then the 0.5 in the two measurement periods. But you've got 3 look back periods to go find your lowest FTE, and then you look at your covered period and do the same methodology on the calculation.
Thanks, Drew. And next question is from Helen. Have they passed a bill forgiving any amount below 29,000?
No, they've just produced the S form, which has no FTE requirements. So that's the simplest method for 50,000 or less.
Next question, anonymous. Our bank is still working on a portal. Should I wait to remit our forgiveness application?
Absolutely. Some of the banks, there's a lot going on with the portal because they keep changing the rules. So I don't know if your bank would even consider taking it in a paper form. There's really no rush because, I was joking with somebody, it's like hooking a garden hose up to the Hoover Dam, right? You've got, again, 5 million loans going through 5,000 banks to 2 SBA processing centers. I mean, it's just going to be a long wait. That's my belief.
And really, this is more of a comment than a question from Neil. And he mentions, and this is a comment directed toward one of the previous questions, your idle loan number is the number on the direct deposit to your account. The deposit says Treasury miscellaneous number is that of your SBA. Is that?
That would make sense. That would make sense. So basically, any borrower who can go get their bank statement can go look at the transaction account, right? Because there's a routing type of number. So it would
Yeah,
make sense
first I
that they
heard of
would
that.
make those. Yeah, no, that's good. Thank you, Neil.
Yeah, thanks, Neil. And that's it. So we're through questions. I don't see any other rolling in here. And you know, Drew, anything else that you feel is valuable to cover as we wrap this up?
No, I think we'd have to watch what's going on politically, right? There was discussion that the Senate might try to help with stimulus during this lame duck session, but it's still pretty contentious with the vote counting and these two Senate runoff races in Georgia. I think they're going to get a lot of the nation's focus, and you know, if Congress can come back together and pass additional stimulus to help the folks with unemployment, to clarify, there's still 130 billion allocated by Congress in PPP, but the program ran out before the money was just distributed. So that might be interesting if they can come up with a PPP2 and try to means test it. But there'll be a lot of rules to be written about the current system. And then how quickly the SBA can sort of set up their fraud detection and gear up and start processing. I have heard, like some borrowers heard from Bank of America that it's time to get your loan in for processing. I think that some banks are staffed and want to just use the staff to get going on this big project. And other banks are hoping that, you know, by waiting, they can avoid the bulk of this work as something simpler comes down the pike. But I just tell borrowers, again, you've got the full 24 weeks, which most people have ended recently, and then you have 10 months to apply. So I don't feel like there's any rush unless your situation, you're trying to sell a business or you have some reason to get that off your balance sheet, should you feel forced to hurry up. Instead, I'd sort of relax, go through the new year. Hopefully there can be some clarification on the tax issues and some streamlined simplification. I probably would start patiently working on my documentation and having everything, if I have time in my business and I'm not, you know, if this could be a busy season, it could be a slightly slower season, I'd go through, do the documentation, practice on these sheets so you're ready, and be prepared to package it all up. The SBA saying they have years to go back and review this. And the last thing you'd want is to get forgiven and then kind of do a sloppy job and then somebody come call you 2 years ago from now asking for information. It won't be top of mind. So I just tell everybody to do a great job of documenting what they do. And we hope you found this helpful. Again, Drew at Connect Pay USA. If you got any questions, email. And if anyone wants to learn more about joining Connect Pay, Matt's the guy, M. Venuto.
Look forward to hearing from you guys. And again, thank you to the Retail Association and all of the attendees. Have a great day, everyone.